Hey, so you're looking to buy a condo. Maybe you're a buyer of a condo, or maybe you're a realtor with a buyer that wants to buy a condo. I want to give you some tips and advice on a few things. First off, let's clear the air. Okay, condo financing is harder. All right, we did a video about listing a condo, or if you're a seller. Same thing with a buyer. Condos are harder to finance. They are more of a risk. Let's spend a minute talking about that before we get into the tips, okay? So when you're buying a condo, the reason why they're considered riskier than a single family home is there's a lot more steps to the process. There's a lot more added levels of risk, mainly the HOA. I'll give you an example. Single family home, hey, we approved Joe borrower, credit, income, assets, etc. Good to go there, buddy. Then you look at the single family home, we got an appraisal back, hit value, we're good there. End of story. Okay, but with a condo, you have borrower, you have the property, the appraisal, etc. Then you have the HOA. Okay, this is an added layer of risk. The HOA itself, what kind of financial shape is this HOA in? What kind of financial shape is the whole condo in? Is it in disrepair? Are people missing payments for their dues? What are the dues? Are they going up? Are there assessments against the condo, right? Like, so there's a lot of different things that go into the approval of a condo, and the HOA is the reason why. Also, a little bit of the reason why is the fact that at a condo, you usually got people below you, beside you, above you, depending on what kind of setup you got. All right. So condos are going to be more of a risk than single family homes. Those are the reasons. Now, as a buyer, you don't want to be out wasting your time, right? You don't want to be out like looking at all these random condos out there when some of them may not be able to get approved. So I'm going to try to give you some tips to help you out that maybe will, I don't know, mitigate some of that time you spend out there looking around. The one thing I would tell you right off the bat is, what kind of loan do you have? Are you VA? Are you FHA? Are you conventional? Right? All three of those are a little bit of different types of approvals. FHA, here I'm in Florida. By the way, financing in condos in Florida, tougher right now in 2023. It is harder than the rest of the country, but we still do them. But FHA, very limited on what you can do. In Lee County, I think there's like 3 right now, maybe 8 that are approved FHA. All right, not that many. So if you're an FHA buyer, you're looking for condos, it's going to be very hard to find those. VA, that list is very small as well. But with the VA, if you are a veteran looking for condos, or a realtor that's having a problem with a VA buyer, we have a way to help that buyer get into a condo that's not approved VA. All right, we have a workaround on that, so keep that in mind, VA buyers. Conventional, you have way more options out there, okay? Conventional is going to be a much wider range of condos that are available, but know your loan type. Just because you got pre-approved at $300,000 for an FHA loan doesn't mean you can buy anything real estate-wise that's $300,000. Condo has to be a certain loan type. It has to be approvable through that HOA and through the loan type you're doing. All right, so know your loan type. Second, is that HOA or is that development currently closing finance deals? If they're not, if you go back 6 to 12 months and all they have is cash buyers, you're probably looking at a place that's not going to be financeable. Okay, your only options are going to be like a non-QM type of loan, private money, or cash. It really limits your options on what you can do as a finance buyer, right? So avoid those type of places. If they have current finance deals in there, that's a good sign for you. Okay, that means that they're closing deals, they're probably in decent shape. Now, another thing is, as the buyer, what I would suggest you do is during the contract negotiations, ask for, it's going to be hard maybe to get during the negotiations, but once you're under contract, ask for all the condo docs. Okay, and the reason why is, as a lender, we have to approve the HOA. And so to approve that HOA, we've got to go through certain steps to approve them. We have to see their the condo docs, like the bylaws. We have to see their budget. That's a biggie. We've got to see their insurance policies, the master insurance policy, meaning like, do they have flood as well? So we got to see all that stuff to be able to approve that condo unit and the HOA, right? So just keep that in mind as well. Another thing would be the contact person. So different developments have different structures. So you may be buying a condo that's whatever, 12 units, okay? And it's some lady who's just doing the work, been doing it for years, and she's the point person for everything. Well, she's the one we're gonna be ordering the HOA questionnaire from. We're gonna be getting the documents. She's gonna be our point person. We need that information, okay? So have that information ready for your lender. If it's a third party, the place has 300 units in there, and it's a third party that manages that HOA, we need that information. Name, company name, phone number, email address. Have that information ready. Why are we giving you all these tips, by the way? It's so you have a smooth transaction. All these things we're talking about is going to give you the ability to have a much smoother transaction. Will it guarantee it? No. But it'll help you out. So just keep that part in mind as well. That's why we're talking about this. Now, as a buyer, a couple red flags you can look for out there. One is damage. Do you see a lot of damage in the place? Does it look like crap? You're driving around and like the carports are blowing off and blue tarps are everywhere. Like, is there trash bags laying around all over the place? Like certain things like that means that HOA may not be in that good a shape. Another one is, do they have a front desk? Okay, what does that mean, a front desk? Meaning like, are people checking in and out like a hotel? Like it's like a timeshare almost, right? They have a ton of seasonal rentals. People are going in for the weekend, checking in, staying there for a week or however long. That's not a good sign, okay? Conventional loans do not want to see, excuse me, a ton of these seasonal rentals, right? So that's something else to look out for. Another thing is if you get your hands on a budget, if they're not budgeting for 10% of the reserve, or I'm sorry, if 10% of the budget is not going towards reserves being in case of emergency, we have all this money saved up. If they're not saving 10% of their budget every single year, they're not going to get approved for conventional. I shouldn't say not, it's super hard to get them approved if they're budgeting for 10%, under 10%. All right, so those are a few of the red flags that I would look out for if I was a buyer. Now, remember again, with that VA buyer, if you're a VA buyer, we do have a way to help you own that condo, get that thing approved, even if it's not on the VA approved list. All right, so if you're a VA buyer and you have a condo you really like, but it's not approved for VA or anything else, let us know. We may be able to help you with that. All right, so I hope these tips help. Please feel free to share it with anyone looking to buy a condo. Maybe they're a realtor. They want to get a little education. But again, anything we can do to help, reach out. We're licensed in a ton of states here in the U.S. Phone number is 239-437-4278. I'm also supposed to say like, share, and subscribe, right? So we put out a lot of content like this. So hope it helps you out, and take care out there, right? Bye-bye.